The markets are opening very happily for the bulls, about 0.5% higher.
Well, the market is up 120, 130 odd points right now, so it's going strong.
The Nifty is up 175 points odd. We've crossed that crucial 14,750, 14,770 odd level.
About a 250-point gain on the Nifty and a 1,300-point rally on the Bank Nifty.
Markets snap three-day losing streak on strong global cues and hopes of COVID cases declining and recoveries rising. Sensex and Nifty soar over 1.5%. Financials gained the most.
And the Bank Nifty rallies over 4% to notch its biggest single-day rally since the budget. This on expectations that COVID will peak soon and won't result in higher NPAs. ICICI Bank and Axis Bank, both of them soar more than 3% apiece.
Mid-caps gain in line with blue chips on the back of strong fourth quarter numbers. Balkrishna Industries soars 10%, Quick Heal rallies 19%, Aditya Birla Capital 4%.
And L&T and Cipla fall 2% apiece after missing street estimates on revenues and profits in the fourth quarter, while Escorts ends lower after the management says that tractor sales for FY22 can drop sharply if COVID surge and lockdowns extend into June.
And global-facing themes are back in the limelight as the US and the European economies open up. Stocks of companies with strong overseas footprint like Tata Motors, Motherson and Apollo Tyres surge.
You're entering CNBC-TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
Well, those were the top 5 headlines from Dalal Street on a day when the markets just went through the roof, notwithstanding COVID surges and notwithstanding a raging cyclone in the western coast. Welcome to Markets Today, the show where we will tell you all that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh, and with me my colleague Nigel D'Souza. Hi, Nigel.
Well, thanks for that, Lata. But we have a lot on the show, and it's an action-packed show of today itself. In market opinion, we have Nilesh Shah, MD Kotak Mahindra AMC. We also have a whole host of guests, starting with Aries Israeli of Dr. Reddy's Lab and Sangeeta Reddy of Apollo Hospitals on Sputnik V vaccine. In corporate voices, we have Bharat Madan of Escorts in the company's Q4 fine print. But before we get to all that, Lata, what do you make of the market action today?
Well, I think the markets were closely following the COVID trajectory, and I think the bar chart should come up for you. May 13th to May 17th. Just take those 5-6 days, and what you will find is that while we were adding 3.6 lakh cases in 5 days ago, it's dramatically falling, and the last number we have is 2.81. Well, the weekend always has an impact because fewer people are tested. But look at the recovery. That's not related so much to weekend numbers, and there we are rapidly rising to 3.78 lakh. The last number. In fact, the difference between new cases and recoveries has widened to 1 lakh. Today, the active cases fell, that is over the last 24 hours, by 1 lakh numbers, which is the highest I can remember. And therefore, the markets were understandably cheerful. All that was terrible about the second surge has been packed into the prices, seems to be the belief that investors had today, and that's why you saw the stocks rising. The other big reason, of course, is that many of the results are better than what the street was expecting, and that also helped. But you tell us, what were the themes that shone today?
Well, Lata, you said it. The market is factoring in that the worst maybe, or we're closing to the end of this second wave. And it was evident in terms of the moves that we saw in the Nifty bank names. All of those banking stocks, they had big winners in today's trading session. Why is that? Because, if people earn money, if the economy doesn't get disrupted, they'll have enough money to service their loans. So the hope is that NPAs will not go up from here. And that's why the Nifty bank was a big outperformer in today's trading session. And also, if the economy is going to revive and, recover, then a couple of cement names. Remember, Ultratech Cement's numbers were splendid. The stock has been selling off post that as well. So, the hope is that economic activity will restart. That's why you had a couple of big cement companies that did well. But there were a couple of losers, stock specific. Cipla was under pressure. L&T was under some pressure as well in reaction to its numbers. While Sun Pharma, well, that one as well was down close to around 0.5% odd. But there was a big recovery in these metal stocks that we tracked from the low point of the day. The buzz was that there were some price increases that were taken, particularly on HRC as well as on CNBC. CRC. And that's why those stocks are up only 1.5%. Or JSPL, that's into longs, it got a harder hit on Friday. But the reason that the stocks did recover is because another price increase, there was a potential to be pushed through. Kalyani Steel ahead of its numbers, that as well did bounce up. And Tata Metallics and Tata Steel Long Products, well, there's a pending merger out there, so they always move in tandem. But Lata, it was a good day. The Nifty intraday chart should come up for you. If you bought the Nifty at any point of time, you'll be happy because we ended at the high point of the day. Just take a look at that.
That's always the best day for the bulls, when you buy at any point in time and you end the day in the money. Let's listen to market opinion. It was a bit cautious. Nilesh Shah, the managing director of Kotak Mahindra Bank AMC, Kotak Mahindra AMC, spoke to us. He said there is a need to track the impact of the second surge of COVID on the rural economy, which was not impacted so much in the first surge.
Will consumer come out to spend? Post first wave, we did see pent-up demand. Will we see that in second wave or not? This time, rural has been impacted far more compared to first wave. So what will be the impact of rural economy? And will a normal monsoon be able to support rural economy? The third will be relating to MSME, which had become vulnerable after first wave. What will be the impact of second wave on them? And will they require some sort of support in order to recover faster? So rural, MSME, and consumer sentiment, these are the three factors which market will be looking forward to. All corrections, we believe, are an opportunity to buy. Markets are at current level only because of this uncertainty. And as you correctly mentioned, this uncertainty is a matter of time. In the life cycle of a 15-20-year cash flow of a company, 3 months here or there doesn't matter. Post second wave, also listed companies gain market share over unlisted companies, and consumer sentiment continues to see a pent-up demand. We will see profitability growth continuing, and hence every correction becomes a great opportunity to buy it.
Well, let's get to the second headline now. The Nifty Bank soared close to 4% on expectations that COVID will peak soon, and the hurt in terms of NPAs will be lesser than earlier estimated. Lata, run us through all those data points. Big rally is what we saw on the banking stocks.
Yes, actually you covered most of it, and perhaps even I did. It's really the COVID numbers. The fact that you are having a dramatic drop in the number of cases. It's always good to see a 2 decimal point, 2.8 lakh, compared to the fact that just about 1 week back, we were looking at 4 lakh. So, that itself was very positive, and the recoveries. So the investor sentiment, I think, is taking hope from the fact that because of this, the extent to which there will be a damage of MSME companies, etc., is already known. It is in the price.
Yeah.
And the big companies have, as a percentage of their book, have not lent so much. That's one reason. Therefore, there is a chance that the NPAs will not be very high.
Yes.
If the second surge goes on into June, then perhaps people will revise their estimates. Also, in anticipation that there is going to be, an elongated second surge, the finance stocks anyway were not doing very well. Actually, if you look at it year to date, who are the worst performing stocks? Kotak Mahindra Bank, HDFC Bank, HDFC. These are the companies which anyway people were, they were under-owned in the second rise of the markets. And therefore, my sense is today all that saw a lot of short covering, or at least some bit of build-up, some long build-up as well. My sense is the expectation is that banks anyway will gain when the economy recovers. And the latest round of numbers is giving people the hope that economic recovery is not entirely damaged.
Okay, all right. So that was in terms of the banking stocks. But the third headline today was the mid-caps. Well, they made a comeback today after the index soared close to around 2% on the back of a strong showing in select companies. You had a whole host of numbers from the likes of Balkrishna Industries, Quick Heal, as well as AB Capital, well, they did very, very well. And I'll tell you exactly why. Let's start off with Quick Heal first. Well, out there, the revenue growth was splendid. Yes, it's coming on a low base, but when it's up close to around 64% odd, that's telling you the kind of numbers that, in fact, they delivered. In terms of margins as well, it was at around 51%. I was looking at the last few quarters, it was hovering around that 25% to around 40% odd. So 51% was fantastic, and profit number as well looked pretty good. The support that came in for them was that at the start of today, 40% of their market capitalization was available in cash because they have a good balance sheet with a lot of cash in their books, and that's why the stock did spike up. Moving to Balkrishna Industries, those numbers look good, some of the best ever that we've seen from the company. 25% growth in terms of revenue. The operating profit grew more, telling you there was margin expansion coming in at around 32%, and the profit number as well looked good. What the street was excited about was in terms of the management commentary. They said, yes, they're having some problem because of the second wave, but they've still guided for 10 to 15% growth, which is very, very strong. And they also said that demand that they see, or they foresee, is very, very good. So strong guidance, strong numbers. Both those two stocks did well in today's trading session.
That was the weekend numbers. But the numbers we got today were also very good. Colgate, that stock ended about 2% higher. And again, that stock was reacting to numbers. So let's go across to Mangalam to get the highlights of the Colgate numbers. Mangalam.
But Colgate reported a very strong set in the fourth quarter. Not only was the top line marginally above expectations, the key surprise was the operational performance, where there was a 60% jump in the EBITDA, and as a result of which the net profit was higher than the street expectations as well. Why was the EBITDA higher? Well, there was a stable raw material environment, favorable raw material environment, as a result of which the gross margins expanded by 300 basis points, and the company spent less as a percentage of sales on advertisements than what they did the same time last year. So that was another 300 basis points cost savings. So as a result of which we saw a near jump of 600 to 700 basis points on the EBITDA, coming in at 32.5%. This compares with 24.5% odd. What was important was the management commentary as well, and that was positive. They said that they continue to see strong momentum across all categories. They continue to drive efficiencies with regards to cost, as well as a discipline on ad spends, etc. And they continue to amplify their innovations. Innovations is something that was lacking in Colgate for the last few quarters, so this is positive. However, what the street would have liked a little more is some clarity on the way this 20% revenue growth has come by, how much of it is volumes, how much of it is value, and most importantly, whether they've continued to hold on or gain their market share or not. But be that as it may, these are very good numbers. The stock was trading at a discount to the sector and has spiked.
Well, thanks a lot for that, Mangalam. AB Capital, well, that was the other one that was in focus today. They're looking to unlock value. The company's asset management business is set to go public, and roadshows for the IPO have begun. Nisha's been tracking that. She joins us to fill us in with more on that. Nisha, over to you.
Sources suggest that Aditya Birla Sun Life AMC has kick-started its roadshows for the IPO process, and they are expecting a valuation of about 22,000 to 24,000 crore rupees. In terms of the offer for sale, the entire IPO is an offer for sale for 13.5% stake, and the Canada-based partner Sun Life Financial is going to sell down 12.5% stake out of the 49% stake it holds in the partnership, and 51% stake that Aditya Birla Capital holds. Out of that, 1% will be sold through OFS in the IPO process. In terms of the valuations, they are expecting a top level valuation closer to what HDFC Mutual Fund has been trading at. So they're looking at price to earnings of about 38-39 times of 1 year forward looking estimates, and that is something which is right below HDFC Mutual Fund's valuations, but higher than what Nippon has been trading at. Remember that Aditya Birla AMC vertical has been looking at bolstering its equity portion from above 36% currently, and the total assets under management currently stands at 2.6 lakh crore rupees.
Okay, thank you very much for the key takeaways. And Nisha has those key takeaways because she chatted up Ajay Srinivasan, the CEO of Aditya Birla Capital. Here's a slice of that chat.
I think what we've done is we've filed the DRHP for our asset management company. It's an offer for sale that will lead to the listing of the asset management company. So that is, the first step in value unlocking that we've spoken about last time. I think the board will constantly look at different opportunities and avenues to be able to unlock value. I think we've taken some steps in the course of last year to rationalize cost. That's been one of the factors that has led to an improvement in profitability in the last year. As far as equity is concerned, as I said, we're really looking at building up our equity mix as a percentage of the total mix. That mix also changed last year. So it moved from 35% in the previous year to 36% this year. And that journey will continue. We believe our growth story is based on increasing equity, increasing our retail participation, and going into the much smaller towns in India where we think the ownership of mutual funds is still building. And therefore, that gives us the ability to build a new customer base for the mutual fund industry.
Well, time to slip into a short break, but when we come back, we'll take you through all the other headlines. Stay with us. Welcome back. You're still with us on Markets Today. Well, let's run you through the rest of the headlines that we're tracking for you today. Cipla, well, that was the stock in focus, and that's part of our fourth headline. The stock, in fact, was under pressure as they misread expectations in its fourth quarter. The stock fell close to around 2.5% odd. Ekta Patra joins us to run us through a quick analysis. Ekta, over to you.
Well, yes, Cipla was definitely a bit of a disappointment in Q4. Revenue growth was up only around 5% margins at 17.3% versus estimates of around 20-21%, and profit at 411 odd crores versus a street expectation of around 550 crores plus. India was down around 19% Q-on-Q according to analysts, and US was down around 2% Q-on-Q as well. In terms of a couple of key conference call takeaways, Q1 should look stronger in India due to COVID-19 sales. Cipla believes there's more room to capture when it comes to the albuterol inhaler. They have market share of 13% currently in the US. Advair generic has seen some queries from the inhalation space again from the US FDA. A couple of brokerages, JP Morgan has a neutral call. According to them, they are disappointed by the US sales despite the albuterol ramp up and muted gross margins. Goldman Sachs, a neutral call, reported a Q4 miss, that is Cipla, and led by a 200 basis points gross margin impact. And Morgan Stanley, overweight, target price 949 for that particular brokerage. The company continues to strengthen its base business in India, US and South Africa. US inhaler pipeline is looking deep with several late stage products.
Okay, the other biggie that came under pressure was Larsen Toubro. It closed 2% lower after posting what you may call mixed earnings for the fourth quarter. But I don't want to steal the thunder. Agam Vakil is here to tell us what he made of the fourth quarter numbers, or rather what the street made of them. Agam.
So it's a mixed quarter for L&T with revenues and profitability below expectations, but better than expected expansion in margins as well as order inflows for this particular quarter. We have seen revenues rise nearly 9%, near 200 basis point up move as far as EBITDA margins are concerned, with net profit rising 3% year on year. The order inflow for this particular quarter has been a little over 50,000 crores, well above the estimated 47,000 crores. More importantly, the management has given us an indication as far as growth is concerned that is between low teen to mid teens, with EBITDA margins expecting to remain around the same levels. Now, in terms of that, what are the brokerages saying for L&T? One is JP Morgan, who has maintained an overweight on L&T with a price target of 1,815. They say that execution headwinds will be transient, and commodity costs rising is something which is manageable for the company. And we also have Goldman Sachs on L&T, who has a buy call at the target of 2,000 rupees per share, and say it's been a strong performance with optimistic commentary. And this is also a positive based on the capital expenditure uptick that the company is expecting in the years to come. All in all, brokerages positive on Larsen Toubro.
Got that. Thanks so much for that, Agam. Well, Escorts posted a strong set of numbers with the revenue growth in the fourth quarter. We spoke to the company's CFO, Mr. Bharat Madan, and he said with the second wave of the COVID-19 pandemic hitting rural areas, tractor sales could be impacted in the short term. Although in the second half of the fiscal, it's likely to pick up to give the industry a mid-single-digit growth. Let's listen in to what he had to tell us.
I think this time the second wave has been obviously quite serious. Unlike in the first wave, we had actually, a bit on the road side. But this time we are seeing the impact has been coming now on various states, and the markets are getting impacted. But good thing is, if you look at the rural side, I think the factors are all positive. Very record output for the Rabi crop, good procurement by government, good pricing for the farmers. So cash flow wise, I think the rural still is in a much better shape. That we are seeing in the demand for April month also. Everything, all of the factors were positive, but definitely that had an impact on the demand. Whenever the recovery happens, so like we saw in the last time after the lockdown, there was so much of pent-up demand. So we expect the same thing will actually happen this time too. So we're just keeping our fingers crossed and hope the things will actually recover soon and everything normalizes.
Well, the fifth headline from the street today: many economies in Europe and, of course, the US are starting to open up, and this is proving to be a big boost for companies with significant footprint abroad. We'll just run you through some of the stocks. Tata Motors was one of the big gainers in the Nifty, rising about 2.83%. Motherson Sumi again showed a 5.1% uptick. As we know, they have a lot of factories in Europe, and they're expected to benefit from European economies opening up. And likewise, you also saw Apollo Tyres, not Apollo Hospitals, Apollo Tyres rising again on expectations that the export market will do well. So global facing stocks are back, or at least were one of the themes in the limelight today.
All right, then India received its third vaccine as the Sputnik V was launched at 995 rupees per dose. Dr. Reddy's expects to import around 36 million doses of Sputnik in the next 3 months, after which the local manufacturing is expected to start kicking in. We spoke to the Chief Executive Officer, in fact, Mr. Israeli of Dr. Reddy's Laboratories, who joined us earlier today to talk about the vaccine timelines. Let's listen in.
We are covering our cost and maybe a little bit more for mistakes, etc. This is not going to be a very profitable product for us, and this was not also our goal. Our goal is to bring the product to the market, as to vaccinate as many people as possible, understanding that the important route is more expensive because you need to pay for the important products, plus the logistics from Russia, plus the logistic and cold chain within the country.
All right. We stay with pharma and hospitals. Sangeeta Reddy, the joint manager of Apollo Hospitals, spoke with us on the situation in south of India with respect to COVID. She also spoke about Apollo Hospitals' plan to start vaccinating employees of Dr. Reddy's with the Sputnik vaccine. They have a tie-up, Apollo Hospitals and Dr. Reddy's, for vaccinating with the Sputnik V. Listen to what she had to tell us.
The vaccine is the most important thing for us now in this battle, as every day was, just treating patients, looking for beds, finding ways to enhance ICU capacity, ventilators, but vaccine has to be the underlying urgency for us to really solve this. So we are, happy that we've been able to, work with Reddy Labs. They have committed that they will give us a significant number. Today, we started vaccinating first with the Reddy Labs employees themselves. And we're hoping that we will be getting about 1 million doses from them in the next, spaced out over the next 1 month. First problem which we have to solve is the actual availability of vaccine. So the ramping up of vaccine by all the vendors who are in the play, the ability to import international drugs, the seeking of some of the international aid, which has been quite significant and powerful, but also to be in the form of vaccines. This combination should come into play, because the biggest shortage right now is not about administration, but it's about the supply of the vaccine. So we had done some estimates of the overall number of vaccines over the next few months, and we believe that by June, the situation will, of course, be much better, with about 350 million doses available. But by July and August is when the situation will really ease up.
Okay, so that's the word coming in from Sangeeta Reddy on when the vaccination availability will improve. And with that, we wind up on this edition of Markets Today.
Thanks for watching. There's more lined up on the other side.